Hello, everybody. Welcome to today's Daily Edge. Very happy for with the amount of people that we have today. But why don't we give why don't we Hello, everybody. Welcome to today. Why don't we give a little bit of time for everybody to join us? And yeah, let's give everybody a couple of minutes, and then we can start. Is Daily Edge. Very happy for with the amount of people that we have today. But why don't we give why don't we Hello, everybody. Welcome to today. Why don't we give All right, everybody. Let's start, and let's start by looking at the news terminal. There's a lot of Brexit news, as you can see here on the top left of my news terminal. But we're not going to go through all of them, right? There has been a lot of noise, a lot of chatter. But basically, what's going on is that MPs are asking Boris Johnson to ask for a delay uh, on Brexit. And of course, Boris Johnson keeps his rhetoric of leaving the EU on October the 31st. So let's go and let's see what has happened with the British pound. All right, so this is the British pound against the U.S. dollar, and yesterday we were looking at exactly this level right here. This is the 120 level, and well, if we're going to go to the daily chart, because I want you to see why this level is so important. Okay, not only it's a very low, I mean an extreme low on the GBP versus the US dollar, but as you can see here, is where we have found buyers again and again. And now we are trading at this exact same level. I mean, we haven't seen this level since January 2017, and right now we are exactly at the same level. So basically, let's go to the 4-hour chart because well, in my opinion, it is very risky to start buying the pound against the US dollar at this level because of the political environment in the UK right now. Okay, the uncertainty makes this a very risky buy, which is why I'm not going to be taking it. But if you look closely, let's go to the hourly chart. If you look closely, right here, you can see that we have some kind of rejection or buyers jumping in at the 120. These can also be sellers closing their positions, and right now the pound is well, is gaining against the US dollar. But like I was saying, in my opinion, it's a very risky buy. And what I would do, and what I'm actually waiting for, is a retest of the 120.75 level, this level right here, to go short. This is a previous base, and in my opinion, it's a key level on the pound versus the USD. Again, this it's kind of close from where we're trading right now, only 72 pips, and I actually would like a deeper correction to maybe this level right here. This would give me an excellent risk to reward for a short trade on the pound versus the USD. Sadly, I missed this move yesterday, but I mean, opportunities come every day, and I'm going to be looking at the 121.80 for a possible short right here. This is, I mean, this is what I'm waiting for. Wow, what a big push on the pound! What a big push on the pound, guys! That is insane. And like I was telling you, the 120.75 level right here is where we are finding some resistance as we speak. So let's go and let's have a look at the pound versus the Japanese yen. And the reason I want to look at the pound versus the Japanese yen is because this is one of my favorite pairs to trade. Well, last week I got caught on the opposite side of that trade when I saw a rejection of this previous level, but that's fine. But right now, we didn't quite hit the 126.50, but if you look closely, we moved down 160 pips and up 160 pips just today. So this is, I mean, this is some crazy movement on the pound. Let's see if we have some news coming out of the UK right now. Nothing special that prompt such a big move, but I told you that right now it's a risky environment to be trading the pound, and if we get to the 121.80, I will be looking for a short opportunity, because if we get to the 121.80 right here, the risk versus the reward is going to be much better, and the trade is going to be less risky because there's going to be less volatility, like the one we're seeing right now. So that's the pound. I mean, the pound is crazy, right? Another thing that I want to look at is the US dollar currency index. In my opinion, the US dollar has turned positive, and well, let me show you why. Let's go to the daily chart on the DXY. This is the DXY, guys, and these are my levels, right? The 98.80 was a big level that I was watching, and the next level that I'm watching is the 99.80, right? Uh, let's go to the 4-hour chart again because I want to show you the reason that uh, I'm turning bullish on the US dollar. If you look closely right here, you can see that when we first tested that historic key level that I pointed out, the 98.80, sellers jumped in and crashed the dollar all the way down to the previous base. But again, after this was 2 Fridays ago, I think, that President Trump announced more tariffs to about 300 billion um, Chinese goods. Well, the market, the DXY closed down about 1.20%, and right now we have erased all those losses. And not only that, we have broken with the previous high and with the 98.80. We broke with it, we tested it as support, and now we are moving up. And if you look closely, I have a Fibonacci retracement level right here, the 161.8 retracement of this crash, all right, of the last leg down. This means that we have retraced 161.8% from this move, from 2 Fridays ago, and the 161.8 retracement is a key target for a key target for longs in this scenario, because we are retracing from a move down. Okay, so and as you can see, price has stopped at this level exactly. So I expect a retracement back around the 98.80 for a continuation higher on the US dollar. But it doesn't matter if we pull back a little bit. I remain very bullish on the US dollar above the 98.80 level. So having said that, let's have a look at what has happened with the euro versus the USD. Now, the euro versus the US dollar, this is a lot of levels that I have on my charts, I know, but we're just going to talk about some key levels right now. We are trading below the 110, okay? Now, right here is the 110, and we are trading below this level. And the last time we traded at these levels was, let me just grab my crosshair tool, was in May 2017. So why don't we go ahead and look for key historic levels to see where we can find some targets to the downside. Okay, now I really think that this base right here is going to be where buyers are going to be stepping in, where sellers are going to be taking profits on the euro versus the USD. Now let's go back to the 4-hour chart. For the time being, there's no trade in my eyes. We missed that move, but if we move, if we or when we get to the 108.60, I'm going to be expecting that retracement back to around the 109.40 to 109.80. Now, if you want me to look at something else, guys, just type it on the chat, and I'm will be more than happy to look at it. Now, gold is another instrument that I love to trade, but right now it's, it has been very, very choppy. Again, if you look closely at my chart, I have the 161.8 retracement of the last move down. This means that we retraced 161.8, and we retested again the 161.8, and now we are chopping inside of how many pips? Inside of 120 pip range. So in my eyes, there's no trade right now in gold. Um, I mean, if you're a day trader, you might have taken this long right here, but this is not my style. Okay, the way that I trade is that I take long-term positions, and I hold them for a while. And right now, in order for me to be a buyer, I would need a retracement back to around the 1495 level. I'm still very bullish in gold. Actually, my bull bear line is the 1485. This means that if gold crashes below the 1485, I'm going to be looking to sell this metal. But as you can see, we are still in a very bullish structure, making higher highs and higher lows. And this right here is just some choppiness, some choppy price action that in my eyes is untradeable. Um, but if you guys have any thoughts about this, just go ahead and put it on the chat. Now let's move on and let's have a look at let's look at the how crazy price action is in the pound right now. I'm going to take my other charts, and let's have a look at crude oil. Now this was a great short opportunity that we pointed out last week, I think, when we saw that sellers were stepping in at this level again and again, and we didn't quite get to the 56.95. Again, this is the CFD's chart. So if you're looking at crude oil on futures, the pricing might be a little different, but price action, it should be the same highs and the same rejection at your levels. And right now, this is very interesting because right now we had a bull trap right here at the point of control. Now the point of control of this entire move, okay, my volume profile is calculating the volume of this exact move, right? It's calculating the volume of the price action inside this triangle, okay? And the point of control is the level with the most volume traded in this area, right? And as you can see right here, we had a lot of rejection at the point of control, and buyers were stepping in. But again, this chart looked very bearish, and I knew that this was a bull trap. And what's interesting right now is that we are breaking with this structure, okay? I'm not very keen of trading trend lines, but this, I mean, this is extremely bearish in my eyes, okay? So what I'm expecting is at least a test of this level around the 52.90 level in crude. So I expect more downside in this asset. Now let's have a look at Bitcoin, because we just started analyzing this cryptocurrency, and this is the daily chart. Let's move on to the 4-hour chart, and we were looking at this level, the 93.80 level, for a buy opportunity that we took actually, and we already took some profits off, but we do expect more upside on Bitcoin. Now this is what's important about key levels, okay? Understanding price action, and because you can see right here that this is where buyers stepped in, Okay, big rejection to the downside. So we were, we were waiting for price. We were waiting for Bitcoin to hit the 9380 level for a buy opportunity. Okay. Now, of course, that no one knows if price is going to break or not. Okay, this game is all about math and risk management, and a buy at this level gave us an excellent risk to reward. Okay, so we took a buy here with a stops below the lows, and we took profits at 1030, the 10,300 level. But I do think that we are going to. That Bitcoin has more upside to come. So what I'm going to be looking for is a real break of the 10,467 level, a retest for an add for to scale in on this position for a retest of the 12,000 level. Now, this might not happen today, but this is exactly what I'm looking at. Now, if you didn't take that trade with me or with us, um, just keep in mind that um, if we break to the upside, there's going to be a lot of momo traders, a lot of momentum. Okay, so don't get caught buying a breakout. Okay, be patient for momentum to dry out, for price to test again the level of resistance as support, and then for the setup to evolve and give you the opportunity to buy. Because if you get caught in momentum, let's say that right now price in Bitcoin breaks with this level, okay, and because of how thin this market is, you're going to you're not going to get the best price on your buy. This means that you might get in all the way up here, okay. That would mean that your risk will be this, and because this is a momentum trade, or a breakout, it's a momentum trade. Momentum is going to dry up, and you're going to get caught at the top of the move. So it's better to just wait for price to come back for a buy. And of course, when I see this, I'm going to give you my trade idea on our premium community, on our premium chat. Now let's move on. Yesterday we were talking about the FTSE because, Brexit, and very interesting because I never look at this chart. Actually, I never look at it, but this level was so key that. Yesterday I was talking, or I think that I think that I pointed it out on an article on social media, that here's where we were expecting some bearishness, and that's exactly what happened. We had one test yesterday, one test today, and now we are moving down. Again, this is not entirely bearish for me because we haven't broken or with this previous low, but it all points out to a continuation lower on the FTSE. Now, if you have any questions, guys, just type it on the chat. I'm here to answer all of your questions. If you don't have any, just we're going to move forward. Now, I'm going to give you an example of how why I trade the way that I trade. Now, this is the euro versus the Australian dollar. Yesterday there was monetary policy from the RBA, and because this is because this is such a key level, and because I saw this rejection, or this because I saw that sellers, after this big move to the downside, weren't unable to break with these lows, I was looking to buy the euro versus the Aussie. Not only because sellers were unable to break with the lows, but also because of this big move to the upside. Okay, now this explosive move to the upside, plus this level being unable to break, gave me an opportunity to buy the euro versus the Aussie. But I never enter at market, and the reason that I never enter at market is because of what happened with the euro versus the Aussie. Okay, yes, buyers were stepping in, sellers were unable to break with these lows, but in my eyes there was not a setup developed to enter at market. Okay, I needed this high to break in order for a confirmation of a move higher. And what happened is that this high was never broken, and now we are moving lower. Okay, now this is just an example of why I use pending orders on my trading. Okay, this is the way that I manage risk, and yeah, sometimes I get ticked or filled in and get stopped out. But if I've done the back test, I've done the research, and I've done the work, and if you take this example or this situation in particular, and you enter at market, you are going to lose money in the long term. Okay. Now let's move forward. Let's move on. Again, if you want me, if you have any questions, or you want me to look at something, just type it on the chat. Let's continue with. Why don't we go and look at the US dollar versus the Canadian dollar? We have non-farm payrolls this Friday. We have non-farm payrolls on the U.S. and employment numbers coming out of the Canada too. But that's until Friday. Now, yesterday I was talking about this exact situation. Okay. Now I was talking about how this looked very bullish to me. Okay. Now this is this is an ascending triangle. Okay, with a flat top, and most traders are going to be looking to sell at these highs. Okay, and yesterday I was talking about that, and it's very interesting because I don't see it that way. Okay, now I'm going to explain to you why this looks very bearish. Very bullish to me, and not bearish like everybody else. Now, if you look closely, these moves to the upside are very. These are very big moves to the upside. So big buyers coming in, unable to break with this level. But what happens is that they give up, and they try again, and they try again, and they try again until they finally break to the upside. So instead of selling a correction, okay, and the reason that this is the other reason that I hate selling this exact pattern is because the impulsive move is to the upside, the corrective move is to the downside. So this means that you are going to be, if you sell the US dollar versus the Canadian dollar, okay, if you sell the US dollar versus the Canadian dollar here, you're going to be trading against the impulse. Okay, you're going to be trading on a pullback, and not only that, you, you don't have key levels to trade from. I mean, yeah, you do, but they're very short term, okay? And the risk versus the reward is just terrible, okay? Now, yesterday I was looking at a buy on the US dollar versus the Canadian dollar, but again, there was no setup for me, okay? Now, I mean, we had a fake out, and this could have been a buy, but I don't trade this setup because of the risk. I mean, because of the risk versus the reward. Let me just click on this chart out for you guys, and this is very interesting. So I'm going to go to the hourly chart, and yeah, if you find this interesting, I mean, you're like me, and just type it on the chat. Okay, so basically what happened is that we had a fake out, and this could have been the buy opportunity that I was looking at. Okay, but I don't trade this setup because there is no key level. Okay, there's no key level. The only key level that I mean, this, and to me these are not key levels because they're so short term. Okay, so it should, I mean, if I wanted to buy right here, the risk would have, I mean, my stop loss would have had to be around. I mean, there's not even a low where I can put my stop, you know. And this is the way that, I mean, this is the way that I look at the markets. Okay, yeah, this is a fake out. Okay, buyers are just recharging to have a real breakout, but there is no low for me to put my stop, and that means that there is no low that invalidates my trade idea. Okay, now this can, I mean, this would have been a fake out and a complete pullback to the previous lows. Okay, so I mean, if this I mean, if the scenario would have been a real pullback to the previous lows, this would still be bullish in my eyes. Okay, this will still be bullish in my eyes, and that means that my stop would have had to be below these lows. So that is a major risk that I'm not happy in taking. So what I do is I wait for a real breakout and a retest of the level that I'm looking at. Again, there was no real setup, but I mean, that's just some that's just my thought process on how I look for setups. You know, if I don't have an invalidation level to put my stop on, I don't trade that setup because in my eyes, trading that way would be setting money on fire. You know. And in the long, well, let's have a look at the reward, at the possible reward of this trade, okay, for our chart. So take a look at this, okay. This is the red line is the previous highs, which would have been my first target on this long. So let's say that I took this trade, okay. My stop would have been 70 pips for a 106 pip reward. That means that it's a 1 to 1.3 risk to reward ratio, no, 1.5 risk to reward ratio or something like that. And that is just terrible because with that low or that or with such a terrible risk to reward ratio on a low probability trade, you are not going to be making money in the long term. And this game is to, I mean, you can't be results oriented when you're trading. Okay, you have to look at this in probabilities, like I told you before. The probability of this setup stopping me out might be 50-50, okay? And with such a terrible risk to reward ratio, you're not going to be making money in the long term. So let's have a look at, I don't know, let's have a look at the US dollar versus the Swiss franc. The US dollar versus the Swiss franc, I mean, the level that I'm looking at the on the US dollar versus the Swiss franc is around the 99.40 level. For the time being, I don't have, there's actually, there's nothing going on. Um, unless we hit this level right here, I will be looking to buy because of my bullishness on the US dollar, okay? But again, this market is so slow. Uh, I mean, it's so slow that the risk. I mean, if I take a buy here, I would be risking about 20 pips to make 70 pips. I mean, the risk to reward scenario is awesome. I would definitely take it, but I would need a real, a real confirmation of buyers stepping in, and of course, I would have to be looking at the U.S. dollar, because if the DXY is in a pullback, I will never buy the U.S. dollar versus the Swiss franc. Okay, now this is why I always have the DXY chart on in front of my eyes, because most of the most of the trades that I take are biased on the US dollar. Now let's move on. Let's see what we have here. Um, well, the funny thing about the US dollar versus the peso mexicano, the Mexican peso. Um, this is another interesting. This is another interesting rule that I have. I have a time stop. Okay. Now, I took a short position here on the U.S. dollar versus the Mexican peso. When was it? Yesterday, I think. No, it was on Friday. Yeah, it was on Friday. I took a short position around here. I don't remember exactly where I took it. With my stop loss. Uh, um, I think about this high, and my first target was around the point of control. Or, well, you know what? Why don't we have a look exactly what we were trading? All right. So the US dollar Mexican peso, I took a short at the 20.099 level with a stop loss at the 20.66. So basically, I took a short here, 20.099 level. So right now I will be breaking even, and yeah, my stop loss was above this high, and I was my first target was what? 1990. So my first target was here, yeah, exactly, around the point of control, exactly at the point of control, and my second target was here. So about my time stops, or why do I use time stops? Okay, I use time stops because well, I've done the I've done the work, and I realized that whenever I well, not every time, but when I had a trade that didn't move for 24 hours, most of the time I got stopped out out of the trade. So if the trade doesn't move in 24 hours, I close it with a small loss or a small win or a break even. And it doesn't matter if if the trade actually moves in my direction, okay? Um, because I don't I'm not results oriented. You can't be results oriented, okay? I know that historically, if I leave a trade more than 24 hours when the trade isn't moving in my direction, I'm going to be stopped out more than I'm going to hit my targets. So that's why I executed my time stop on the US dollar versus the Mexican peso. If you had, I think that you guys had that question about why I closed it. Okay. Silver. Yeah, I mean, this is the first time that I've talked about silver in with you guys, and the reason that I'm looking at silver is because of the levels that it's trading at. Okay, now if you want to look at the levels, let's go to the daily, and right now we are trading here at the 1858, I think. Yeah, the 1858. Very, very, very big zone of resistance. I mean, just look at how sellers jumped in again and again and just crashed price down. Okay, we are above the 1814, the 1815 level, which is another big level of resistance where sellers jumped in and just crashed price down. Okay, so historically these are two very important levels to me. Now, if we go back to the 4-hour chart, uh, I know, let's go to the hourly because I want to look at price action correctly. I mean, if we look at what's happening right now, well, we're trading inside I mean, it doesn't matter if we trade inside of a triangle or not, actually. But what's interesting is that uh, this bullish move, this very very impulsive move to the upside, has dried up. Okay, it has dried up. So I do believe that because of how important these levels are historically, we could have a great short opportunity on silver. Now, what has me thinking that I might not take that trade is the other level. I mean, we're bouncing from the 1858 level, but the other big level that we broke with and tested as support, you can see it here again and again, is very close to my entry. So the risk versus the reward on my first target would be, I think it would be less than 1 to 1, and that is something that I just don't do. So 248, yeah, it's less than 1 to 1, 200. So that's something that I don't do, okay? Because trading with a negative risk to reward, or trading on a negative risk to reward scenario is something that I don't do, and nobody should do it, because I don't think that there's so high probability setups that risk to reward scenario is going to be profitable in the long term. So that's one. I mean, that's the reason that I don't think that I'm going to be taking this short, if and when it happens. I mean, my thought process, my rationality would be to go short at the break of this triangle and at the break of the previous low. Okay, because I mean it's quite obvious we are making higher lows, and if we break with this low, I mean it's an immediate bearish market. Okay, but if you look here, buyers are protecting this level a lot. So it's going to be very hard for sellers to break with the 1814 or the 1815 level. Okay, so I mean, if price breaks with this low, I would take. I would have to take. I would have to take a partial profits here, move my stops to break even, and it's very likely that I'm going to get stopped out on the second part of my position on a pullback for a breakout. So, because breakouts don't. Real breakouts don't happen with momentum. Okay, you can see it right here. Okay, after this big push to the downside, we broke with this level, but buyers came in. So in order to break such a big, such a big level, sellers would have to recharge, and I would get stopped out. And because I know that that would happen, I would have to leave my stops open and my full risk on. And that is, that is the key reason that, I just convinced myself that I'm not going to take in this trade, because in order for me to wait for a real breakdown or a real breakout, I would have to leave my stops above the 1858 level. Okay, that means that with a negative risk to reward scenario, I would take profit here, but if I get stopped out, that trade would still be a loser. So yeah, I just convinced myself that I'm not going to be taking this trade. Now, if this scenario plays out, what I'm going to be doing is just waiting for this retest to sell. And in my eyes, that is a lot less risky than what I was trying, or what I was looking at, or what I was looking to do. So thank you guys, because by doing this daily edge, I just gave myself the edge that I need not to get stopped out on a loss in silver. So if you have any questions, go ahead, type them on the chat. And if not, I think that that's it for today, guys. Thank you for joining me. I will be back tomorrow around the same time. I'm going to try to host this show at around this time. I think it's much better, because the first ones that I did were around the New York Open, and I do think that that leaves too little time for us to react to what is going to happen. Okay, now Bitcoin breaking out. Let's have a look at pound, shall we, before we go. Crazy price action. So thank you for joining me, and if you're not a subscriber, just of our premium community, there's a link below this video where you can test us out for 1 month for just $25. And don't forget to subscribe to this channel so you get notified every time I go live. Thank you, guys. See you tomorrow.